Hey there, welcome back to Explained Simply TV. And if this is your first time here, you're in the right place. We break down the truth about money, power, and the systems that shape your life, in a way that actually makes sense. Today's topic? It's big. There's a group of institutions controlling interest rates, inflation, and the very value of your money. But here's the twist. You didn't vote for them. You didn't elect them. And yet, they control everything. Welcome to the world of central banks, the most powerful force you've probably never fully understood. So what even is a central bank? It's not your local bank where you deposit checks or get a loan. You can't just walk into one and open a savings account. A central bank is something entirely different. It's the bank for all the other banks, the one sitting quietly at the top of the financial pyramid. Picture this: when your bank needs money, it goes to its bank, and that's the central bank. Every major country has one. In the US, it's the Federal Reserve. In the UK, it's the Bank of England. And across Europe, it's the European Central Bank. These banks don't serve you directly. But they absolutely control your financial environment. They decide how much money is in the system. They set interest rates. They control the cost of borrowing, and the ease of lending. If money is like the bloodstream of the economy, then central banks are the heart, pumping, regulating, and deciding how fast or slow the economy moves. You may not see them, but when a central bank makes a move, the entire economy feels it. Take interest rates, for example. If the central bank decides to raise them by just 0.5%, your mortgage goes up. Your car loan gets more expensive. Your credit card interest climbs. And it doesn't stop there. Businesses react, too. Companies cut back on hiring. Stock markets wobble or crash. Investors pull back. All because of a decision made by a small group of unelected people in a quiet boardroom. Think about that. They don't pass laws. They don't campaign. But with one policy change, they can slow down spending, raise unemployment, or cool down inflation. That's real power. Quiet, massive, unseen by most. And yet, it touches everything in your life. Let's address the uncomfortable truth. You didn't vote for the head of your central bank. You didn't choose who sets the interest rates or controls your money supply. And here's the wild part. That's not a mistake. That's exactly how the system was built. Central banks are supposed to be independent from the government. The idea is to keep politics out of money. To let economists make the decisions, not politicians chasing re-election. Sounds noble, right? But there's a catch. Independence doesn't mean accountability. When they print trillions of dollars, or crash the housing market by raising rates too fast, who holds them responsible? They don't face voters. They rarely face tough questions. And yet, they make choices that affect every paycheck, loan, and retirement plan in the country. It's one of the greatest concentrations of power. Without public oversight. Let's rewind to 2008. The global financial system was on the edge of collapse. Giant banks were going under. Millions of people were losing their jobs, homes, and savings. It felt like the whole economy was collapsing in real time. Then, central banks stepped in. They slashed interest rates to nearly zero. They pumped trillions of dollars into the system to stop the bleeding. But here's the part most people never forget. Who got rescued first? Not the families struggling to keep their homes. Not the small businesses trying to stay open. The banks got bailed out. The same ones that caused the crisis. And while the stock market made a miraculous recovery, regular people faced a decade of slow growth, low wages, and rising inequality. It was a wake-up call. A reminder that when central banks act, it's not always with you in mind. When you think of printing money, you probably imagine stacks of paper bills, fresh off the press, right? But in today's world, money doesn't need paper. It doesn't even need ink. Most money is created digitally, with just a few keystrokes. Central banks call it quantitative easing, or Q. Sounds complicated. But here's what really happens. They buy government bonds and financial assets, using money that didn't exist before. That newly created cash gets pumped into the banking system, fast. But here's the trick. It doesn't go to the people. It flows to financial institutions, to the stock market, to real estate. And that drives up asset prices. Meanwhile, regular people? They're still paying more for groceries. Rent is skyrocketing. Wages? Stagnant. It's money creation, without distribution. A rising tide that lifts yachts, but leaves everyone else behind. Ever wonder how governments can spend trillions of dollars on wars, stimulus checks, infrastructure, and bailouts without running out of money? It's not just taxes. The truth is, they borrow it. Governments issue bonds, essentially IOUs, and central banks step in to buy those bonds. But they don't use existing cash. They create new money to do it. So where does that money go? Straight into circulation. That means more dollars chasing the same goods and services, and over time, that causes inflation. You pay the price through higher costs, while the government avoids tax hikes. It's like charging up a national credit card and passing the bill to the public, slowly, through inflation. Most people never see it happening, but it affects everything. The price of your food, your rent, even your long-term savings. Here's the uncomfortable question no one likes to ask. Who really benefits from the way the system is designed? It's not the average worker. It's not small business owners or families trying to save. It's the big players. The large investment banks, the hedge funds, and governments who borrow endlessly. These groups had first access to the new money created by central banks. They borrowed at super low interest rates, then invested into assets that go up in value, stocks, real estate, even commodities. By the time the money trickles down to you and me, prices have already gone up. That's why you feel like you're falling behind, even when you're doing everything right. It's not just inflation. It's the order of access. The closer you are to the money printer, the better your position in the game. So, is the system broken? Or is it doing exactly what it was designed to do, just not for you? That's the debate. Some people believe central banks need more transparency. They want reforms, oversight, accountability. Others say the entire system is outdated, and it's time for something radically different. That's where things like Bitcoin and decentralized finance come in. These systems aim to remove the middlemen. No central banks. No gatekeepers. Just code and math. But they're still young, volatile, not yet trusted by the masses. So for now, central banks remain at the wheel. The real question isn't whether they're powerful, they are. The question is, should they hold this much power, without your vote? So now you know. The most powerful institutions shaping your financial future don't need your vote. Central banks decide the value of your money, the price of your home, the cost of your debt, and whether your savings grow or quietly shrink. And most people still have no idea how any of this works. But you do now. And that knowledge? That's real power. Because when you understand the game, you stop being played by it. So if this helped open your eyes, even just a little, do me a favor. Like the video, subscribe, and share it with someone who needs to hear this. We're just getting started. Next video, we dive even deeper. Until then, stay sharp, stay aware, and stay financially free.